I'm Hannes Portman, the CFO of Marathon, and it's a thrill to be with all of you. As I will be making a few forward-looking statements, I just ask that you familiarize yourself with this cautionary language at some point. I won't go through it now. And so before providing an overview of where Marathon is today, I thought I would just start with a very brief history of the company, as it's actually been around for a little over 10 years. So Marathon was the spin-out company of a company called Marathon PGM back in 2010. And the team there at the time identified the Valentine property as being highly prospective for gold, and more or less spent the next 9 years from 2010 systematically raising capital, efficiently exploring, and ultimately identified a total resource of about 4 million ounces. And really that is a credit to that previous team to have seen the potential of this property in central Newfoundland. But I'll say, while the focus for those first 9 years was very, very much oriented to exploration only, the company made a strategic shift with the appointment of Matt Manson as the CEO of Marathon in August of 2019 to become a combined explorer and developer. And really that's where we are today, and the crux of the update that I'll walk you through on where our business is and where it's going. And I think in summary, along the left-hand side of this opening slide are really the key attributes of Marathon and the Valentine project. And there's 4 listed, but there's really 5, and the 5th one is people. And I'll get into that on the next slide and provide you an overview of who our team is. But going through those 5 attributes, certainly location is a key one. And we are in central Newfoundland, an area that's very accustomed to and supportive of industrial activity, including mining. So there's a few historic mines just up the road from us, namely the Buckens and Duck Pond mine. We also have a very sizable resource of high-grade open-pittable gold, which is now approaching 5 million ounces in all categories, so quite differentiated in terms of the resource scale. We have a project that has low capital intensity and high rates of return, and that's evidenced by some of the metrics you see there of our recently published feasibility study that came out in March of this year, and I'll walk you through that in a lot more detail. The 4th attribute is our strong balance sheet. So today we have a bit over $100 million Canadian of cash. And that positions us very well to execute on our plans for the foreseeable future, begin chipping away at the overall capital cost, and leaves us in a very strong position to carry the business forward. And as I mentioned, the 5th attribute is really the team of people that Matt has assembled since becoming CEO, and I'll walk you through that in a moment. On the right-hand side are really the 3 pillars or areas of focus for us to move the business forward and continue to create value for our shareholders. So the first is engineering. I mentioned that the feasibility study has recently been completed. We've now moved into the detailed engineering phase, so just for further refining those estimates. On the permitting side, we've made a tremendous amount of progress over the course of the last 24 to 30 months on our overall environmental assessment process, and we remain on track to come out of that assessment process with approvals in late Q3, early Q4 of this year. We've had a lot of success through our team in terms of our stakeholder engagement with the local communities, as well as Indigenous groups. And then finally, as I mentioned in my introductory comments, we remain very dedicated, despite this transition to more development-focused activities, remain extremely dedicated to our exploration efforts and have had some great successes there, most specifically in this new area called the Berry Zone, where we put out our inaugural resource estimate just about a month ago, and we'll walk through that as well. So moving on to the people, as I mentioned, Matt Manson was appointed president and CEO of Marathon in August of 2019. Matt actually came from the diamond industry and previously successfully built the Renard mine in northern Quebec while at Stornoway Diamonds. Did so on budget and on schedule, and that was about $1 billion project. So Matt comes with a very successful history of mine development. Myself, I joined in October of 2019, and my history is with a company called New Gold, an intermediate gold producer, where I held various roles, including ultimately president and CEO there. Tim Williams joined us last summer of 2020, and had been with the Rio Alto group, the original Rio Alto that built 2 open pit mines in Latin America, as well as with Rio 2. Paulo Toscano, our VP Projects, joined us from Alamos Gold, where he was also a project lead, so a very experienced person. Also spent time with Osenko, who was our lead consultant for both our pre-feasibility and feasibility study. So someone that's intimately familiar with both the development side for the company side of the business, but also the engineering consultant side of the business. Jamie Powell, who's based in Newfoundland, is actually the longest tenured employee of the 9 shown here, and even he only joined Marathon in early 2019. So you can see this is a brand new team, really handpicked with the skill sets to permit, finance, develop, and ultimately operate this mine. Mary Hatherley and Tara Oak are also both East Coasters and work with Jamie on our permitting initiatives. Nick leads the management of our exploration programs, and then finally Amanda Mallow is our IR lead. So I talked about location. Here you can see on the left-hand side the red outline of our property. So right in central Newfoundland, it is very proximal to the historic Buckens mine, which is one of Canada's most famous base metal mines, as well as Teck's Duck Pond mine that's just up the road. So again, an area that's very accustomed to mining activities, very supportive of mining activities. Also, as I'm sure many of you on the line today are familiar, Newfoundland and Labrador, it's a rich history of offshore oil and gas, fishery, forestry. So just broadly speaking, the industrial activity in the province is a key driver of the economy, and somewhat sadly, many Newfoundlanders now find themselves having to travel outside of province because the opportunities in those other areas have become less, and do fly-in, fly-out type roles, in whether in northern Quebec, northern Ontario, out in the oil sands. And so what we have in the form of our Valentine project is an opportunity for 400 or 500 jobs to be created for local people that can come home again, so to speak, and that's something we're very excited about and proud of. Some of the imagery on the right, you can see we're located with good infrastructure, so this is a great place to be building a mine, close to power, already roads in place. Those roads will have to be upgraded, but lots of infrastructure already available that we can leverage off of, continue to improve, and ultimately benefit from. So a quick bit on geology. I'm not a geologist personally, so I'll make my way through this as best I can. This is a shear zone hosted gold deposit that all sits along the Valentine Lake shear zone that kind of runs right through the middle of our property and has about a 20-kilometer strike length. You can see that in that orange coloring that runs sort of southeast to northwest. Southwest to northeast on that image on the right-hand side. And that's really where we find all of our mineral deposits, of which today we have 5 that host resources. 3 are sort of the key ones, and 2 that we'll go back and explore further, and I'll talk more about that. But going from bottom left to top right, you can see there our Leprechaun deposit. That's one of the 2 deposits that are included in our feasibility study. Then the Sprite deposit, a small resource there that we're going back to retest this year. The newly discovered Berry Zone, right in between Leprechaun and Marathon, Marathon being the second of the 2 deposits that's included in our feasibility study. And to put that in perspective, from Leprechaun to Marathon is about 6 kilometers of strike length. So you can see mineralization presenting itself pretty much the entire way along that shear zone contact. And then moving up beyond Marathon, there's also the Victory resource, and we're going back there to do some more drilling this year. But really what we have is fortunately a mineralized geologic setting that has gold showings virtually everywhere along this 20-kilometer trend. And what we're looking to identify through our exploration efforts is the areas where the quartz tourmaline pyrite veining of the gold densifies in such a way that it ultimately can host a resource and have a mine plan wrapped around it, which is ultimately the objective here, is to find mineable deposits. Right now we have two, again, Leprechaun and Marathon, with additional drilling at Barry, working hard to see if we might have a third one at some point down the road. Here's really that same layout shown in a different way. This is from Verify. You can actually go on our website and go through this. It's a 3D platform where you can look underground, above ground, spin this around. So it's quite an interactive experience. But this is just a screenshot from that. So again, you can see Leprechaun on the lower left, where we have about 1.1 million ounces of 2 gram gold, open pittable, in the resource category. On the upper right, Marathon, 2 million ounces of 1.6 grams, and then in between the two, the newly discovered Barry deposit, where we have an inferred at this stage resource of just over 600,000 ounces at grades quite similar to those other two deposits. And I remind you, that's about a 6-kilometer strike length from those two. So the idea is to take ore from both Marathon and Leprechaun and feed a central mill that will be located right in between the two for efficiency purposes. And that's our base mine plan and the feasibility study, and we'll build from there. So speaking about the feasibility study, here is just a snapshot of some of its key attributes. Again, this is a very fresh study, having come out in March of 2021. What it demonstrated is an overall proven probable reserve of 2.1 million ounces, grading about 1.4 grams per ton, again, open pittable. What we envisage is the two open pits feeding one central mill for reasons of prioritizing low capital intensity and maximizing rate of return. We decided to start with a fairly modest sized processing facility at 2.5 million tons per annum. That's to bring the capital down. We also benefit from some of our highest grades being available to us right at the beginning of the mine life, so we don't need an overly large milling facility to still produce at a very robust level between about 175,000 and 200,000 ounces per year in those early years. And as the grade then declines modestly to about 1.5, 1.6 grams, what we do is we implement a mill expansion for about $45 million Canadian in year 3 to scale up to that 4 million ton per annum processing rate. And that enables us in that first 10 years of an overall 13-year mine life to maintain the production level on average at about 175,000 ounces per year. And then finally, the last 3 years of the 13-year current mine life is when we'll process the low-grade stockpile. And you can see, because of the drop down to that low grade, those last 3 years are about 56,000 ounces per year on average. But of course, with a continued focus and dedication to exploration, the idea is to keep moving that processing of low-grade stockpile further and further into the future. In terms of the capital up front, it's Canadian 305 million to get to the 2.5 million ton per annum processing rate. I've already mentioned the expansion capital in year 3 of 44, and overall, inclusive of those two capital items plus sustaining capital, or life of mine sustaining capital, is just over 660 million Canadian. In terms of the operation and what that translates to, cash costs of just over $700 per ounce US, and all-in sustaining costs when you factor in that sustaining capital of under $850 US per ounce. So quite competitive, low cost, really a function of the high margin. And what that translates to in the bottom right quadrant of this slide is very compelling economics. So we used $1,500 as our base case in our feasibility study. That was reflective, broadly speaking, of long-term consensus gold prices. And what that led to was a Canadian $600 million after-tax net present value at a 5% discount rate, a 31.5% after-tax rate of return, and under a 2-year payback. I've mentioned capital intensity a few times because, of course, as a single asset developer, not generating any revenue currently, the ability to efficiently finance this project without significant dilution to our shareholders is a key objective. And so one of the metrics we were very focused on is this net present value to initial Capex ratio, and trying to get that as high as possible, and certainly 2 times NPV to initial Capex. We're quite pleased with as an outcome. And then finally, you could see at the bottom, certainly as we think about benefits of our project, not only to the people of Newfoundland and Labrador, but the federal and provincial government, we are scheduled to generate significant tax revenues and really help drive that economy also through the multiplier effects of our employment, salaries, taxes, and all the other beneficiation. One of the things we pride ourselves on is being extremely transparent in our disclosure, and I think this slide speaks to that. This is effectively on every key metric of our feasibility study, how it has evolved from our pre-feasibility study that came out about a year earlier in April of 2020. So I won't read all these metrics to you, but some of the more important ones are a slight uptick in proven and probable reserves from 1.9 million ounces to 2.1. That's extended our mine life by a year from 12 years to 13 years, and importantly, that mine life extension, that additional year, is of the high grade materials, so that more robust period, rather than just adding in an additional year of low grade stockpile. Very small increase in recoveries. That's just a function of additional test work we were able to do between the 2 studies. One area that didn't go quite as well is on the cost side, and I'm sure many of you on the line today will be very familiar with the beginnings of the inflationary pressure that seemed to be in place here, particularly early this year, things like softwood lumber, steel, and we were really finalizing our costing of this feasibility study right in that January, February, early March period. Things have seemed to I'll say plateau a little bit here, but all of our costs reflect that acute moment of strong inflationary pressure we saw on some of those inputs. Also, while Canada as a country has made ever better progress in COVID and vaccinations and mobility, certainly early this year that wasn't yet the case. So the transference of I'll say COVID risk premiums on labor rates, COVID inefficiencies on labor productivity is also embedded in these costs, and so that's why you can see sort of between 12 and 18% increases in some of the key cost inputs of our project. But taken in totality, despite those cost increases at that $1,500 gold price assumption, still a remarkably robust project. Here you can see the mill layout. This is the phase 2 diagram. So this is the expanded version, which is really the addition of the float circuit. And really the only difference between the two is the grind size on the front end, whereby we're able to coarsen the grind in phase 2, add the flotation circuit, and as a result, we maintain the same roughly 94% recoveries. So during phase 1, we have a finer grind because we don't have the benefit of the flotation circuit, and then that $45 million expansion is really the triggering of, the addition of the float circuit on the back end. So very simple design, one that Ausenco is extremely familiar with. One of the items we're looking at is a potential fixed price EPC contract with Ausenco, whereby they would take ownership of the building of the process facilities at a fixed price. That would provide our shareholders certainty on that portion of the project cost, and we're in discussions with them actively as we speak. In terms of the permitting schedule, as I mentioned in my introductory comments, we've made significant progress since April of 2019 when this process was initiated. The key milestones are reflected there in those triangles. I would say the most significant recent one was the filing of our environmental impact statement with both the provincial and federal regulators back in September of 2020. That was then subsequently, after about a month of initial review, deemed conforming by the federal government. So that's the first hurdle you have to get through in order for them to take in your EIS into the technical review stage. So we passed that, which is not a guarantee these days. And then more recently in February, where we received the first round of information requests from both the province and the federal government. So that's really based on their preliminary review, based on the feedback gained through the public consultation period, which in our case took place in December of last year. What they require, a bit more information on, what questions they need answered as a supplement to the EIS itself. So we have been working through those. We actually formally submitted the federal ones about 3-4 weeks ago. So that is now back in their court, and they're actively processing the review. So with all that said, we believe we remain on target for a late Q3, early Q4 release from the environmental assessment process with approvals, and that's on target. In terms of community engagement, late last year we signed cooperation agreements with the 6 communities most proximal to our project, which is a great step. And then more recently signed a socioeconomic agreement with the Halapu First Nation in early May, and then mid-May signed an MOU in terms of our ongoing engagement with the Muapagek First Nation. And so really across the board, working to ensure that the local communities and First Nations ultimately benefit from our exploration, development, and ultimately operating activities in central Newfoundland. Tied to all of that is a commitment to ESG. While I mentioned Marathon's been around for quite a while as a company, I would say with the new management team and Matt and my history with previously with larger companies and familiarity with the importance of ESG, not just from a community perspective, but also from just a business success perspective. This is something we want to ingrain in our culture early and dedicate ourselves to. And we're pleased with the progress we've made so far, but certainly want to continue to focus on this and build this out as a core competency within Marathon. I've already talked about a few of the social aspects. On the governance side, our board has seen some additions recently, so we now have 7 of our 8 board members independent, 2 of 8 female from a diversity perspective. We've put in place new committees, namely a technical committee that provides oversight not only of our health and safety engagement, but our various technical studies to ensure that we're held accountable to those disclosures and activities. On the environmental side, one of the things that changed quite significantly from the preliminary economic assessments that had been done by the previous management team to the current feasibility study was in response to concerns that local communities had, whereby there had previously been a heap leach contemplated as part of the overall processing facility. We've since removed that. We've moved to a thickened tailings deposition strategy. So again, we endeavor wherever possible to take on board the feedback that we get and incorporate it into our activities. And then finally, on a human capital side, very pleased that our current exploration team is all local to Newfoundland and Labrador. I mentioned a few of our permitting team members are also local to Newfoundland and Labrador, excuse me. So that dedication to hiring locally, to ensuring that it is the province and local communities that benefit from our activities is something we will remain very focused on. So in exploration, we started this year with an approved program of 52,000 meters for 2021, a little over half of which was to target this berry zone, which I remind you sits right in between the 2 deposits currently contemplated to be mined and processed in our feasibility study. As a result of the success of the inaugural Berry resource estimate and the scale that it came out at, which was based on about 42,000 meters of drilling through the end of November of last year. So that's what went into that resource estimate. We made a decision to effectively double down on exploration. So we announced 50,000 meters of additional drilling at Berry to take place from about May this year through mid 2022. And what that does is it takes the overall Berry drilling, inclusive of the historic 42,000 meters, plus the 30,000 initially contemplated for this year, plus that 50, gets us to about 120,000 meters along the full Berry strike length of about 1.5 kilometers. And that is akin to the drilling that it took to get Leprechaun into a mineral reserve. So really our objective is by mid next year to put our arms around Berry, understand what we have, and ideally have it at the same level of confidence that we have for Leprechaun and Marathon. At the same time, we are going to go back to both Sprite and Victory and test those resources, drilling in a different orientation to see if we might find some more mineralization there and be able to grow those resource bases as well. Here you can see some images of Berry. This is the image that shows the 42,000 meters of drilling, again done through November of last year. You can see it's somewhat separated into two parts with a little lull in the middle. Certainly that little sort of saddle, I guess you could call it, is something we are going back to aggressively drill test to see if we can sort of, I'll say, merge the two ends of Berry. And you can see some of the more recently published drill results on the lower left, some of which are in that area. And really the goal is to tie this together, infill drill it, and just further increase our confidence. But for example, one of our best holes in Berry ever was that 2.7 grams over 122 meters, which came out post that resource. So those are some of the intercepts that we're getting, which we're pretty excited about. In terms of, you've heard me compare Berry to Leprechaun a few times now, and we show this slide here to kind of describe the different dynamics at play between the Marathon deposit and the Leprechaun deposit. So Marathon is the cross section on the left, Leprechaun on the right. So you can see Marathon is fairly widely distributed in terms of mineralization. That's more intense red coloring is the proven reserve, and so you can see it kind of spread all throughout the deposit, whereas Leprechaun is very, very concentrated in that red ribbon along the shear zone contact. And based on what we know to date from Berry, it's a lot more akin to Leprechaun in terms of how the mineralization presents itself. So as you think about Berry, Leprechaun is the higher grade of the two current reserve deposits. Does come with a slightly higher strip ratio, but the Berry is more directionally heading towards what we see at Leprechaun. So we've already talked about the doubling down of exploration. At the same time this summer, and this has already started, we are going to do an 8,000 meter RC, closely spaced RC drill program to test the resource reconciliation of the first few benches of both the Leprechaun and Marathon deposits. Again, that's just a de-risking measure to ensure that the grade we're expecting early in the mine life is consistent with what comes out of that RC program. Our environmental assessment is proceeding with no changes, so we're all systems go there. We are permitting and building a 2-pit, 2.5 million ton per annum, going to 4 million ton project here. We get asked a lot about, how do we think about Berry? We're extremely excited about Berry, but that's something to be factored into our future. We're going to drill it, we're going to understand it, but it's not going to be factored into our near-term mine plans and things like that. And then finally, we recently announced that from a construction execution standpoint, we are going to move to a slightly reordered sequence whereby we're going to focus in the first half of 2022, subject to receipt of our permits, on all kind of construction elements related to infrastructure, so upgrading roads and bridges, power line work, site communication, putting in place the camp, basically to get everything ready and positioned best such that when we start the civil works in mid-2022, we have a project that's set up for success. Matt's background in mine development, my own, Tim's, Paolo's, it's critical to us to give ourselves all the ingredients to ensure we have an on-budget, on-schedule delivery of the Valentine project. And we believe having that infrastructure in place goes a long way to ensuring that success. So that's what we're going to do. Just quickly on the balance sheet, I noted that this is an area of focus for us as well. We have Canadian 115 million in cash. We announced very recently in May a $50 million financing. About 60% of that was subscribed for by a large gold fund. The rest of it by a group including Pierre Lassonde and Trinity Capital. So Pierre has been following. I know Pierre gave, I believe, the introductory keynote address this morning. Pierre participated late last year in a flow-through financing we did. Participated again in this one, and great to have him as a shareholder. But you can see we have a good institutional shareholder support, as shown by some of the names on the bottom right there. We have good market presence, 11 analysts covering us, strong trading liquidity of well over $1 million a day on average of trading. And then finally, on the top right, you can just see the feasibility study project economics at various different gold prices, our base case, as well as a case that's more akin to where the spot price is, actually probably $150 below the current spot price. But you can see the project economics really jump off the page, and that's all a function of the benefit of that high grade and high margin project that we're fortunate to have. So in closing, just a reminder of what we're focused on and what we're doing. So a bunch of these 2021 milestones have already been achieved, the first three, in fact. So now the RC program has started. We're targeting the release from EA in late Q3, Q4. We're actively engaged in project financing discussions to access the rest of the capital required to fund construction. As mentioned, we will start with infrastructure work early next year. We'll continue exploration through next year. We'll update our resources in the middle of the year with the benefit of that additional drilling. And then site civil works are slated to start in the middle of next year with a targeted gold pour of late 2023, early 2024. So that concludes my presentation. I'm happy to answer any questions the group on the call may have.
Honest, thank you very much. A very deep dive for the company, plans and history and objectives. Appreciate that. Always great to hear the inside word from a company and the vision. And of course, it spawned a lot of questions coming from our audience around the world. So we'll start off with this question. What do you see as the biggest risk factor to your project timeline?
Sure. I would say, really, like anything, it's probably the aspects of our timeline that are out of our control. And what I mean by that is, of course, in our environmental assessment process, we are doing or developing an environmental impact statement that we then hand off to provincial and federal regulators to opine on, to review. And so, like anything in life, when you take something that you're doing and give it to somebody else, you inherently lose a bit of that timeline control. Right. And so while all of those discussions and that engagement with both levels of government are going very well, if there is a timeline risk, I would just say it's the ability of governments to process our file on a commercial type timeline. So it's something we monitor closely. We ensure we continuously remind them of the benefits on the other end, i.e. the job creation, tax dollars, et cetera. At the same time, the process should be rigorous because of all the environmental side of things, and them focusing on that is fully appropriate, and we're fully supportive of that.
Fair enough. Yeah, the best laid plans, and then you hope for the best. But I appreciate the insight there. Question around finance here. How will you finance the rest of the project in terms of debt equity ratio?
Sure. So our target is to do the project financing in I'll say as simplified a form and as simplified a structure as possible. I think there's a thread of targeting simplicity throughout the narrative of Marathon, and it's a simple project, it's a small footprint, and so we want to tie that thread right through to how we finance it. So I would say, something in the neighborhood of 50-50 debt equity, maybe 60-40 debt equity. Of course, it'll naturally depend on the relative cost of capital of those two sources of funds.
Yes.
But broadly speaking, we're not going to tilt to 90-10 in either direction. And on the debt side, we're having very constructive discussions with both commercial banks as well as private debt funds who are very interested in our project, given its jurisdiction, its margin, et cetera. And then on the equity side, we saw an opportunity to raise a little bit of equity with a very strong set of hands a month ago. And so that leaves us, extremely well positioned with over $100 million to carry a number of these work initiatives forward. So we don't have any need for equity here in the near term, and can just kind of assess how the gold market evolves and how our own equity and cost of capital evolve in that market.
Great. Sounds healthy. Thank you for that. Question comes through about the Berry Zone, specifically any sense of what the Berry Zone may do to the project's economics?
Yeah, well, as I mentioned, and I think at the risk of being repetitive, the base project that we are permitting and building is the one laid out in the feasibility study. Berry, we are thrilled by the progress we've made, and what we have there today is 600,000 ounces of inferred resource at very strong grade. That is why we are doubling down on exploration, is to keep pursuing the knowledge of what Berry could become. If you'll allow me just to use Leprechaun as a goalpost of what it could become, and ideally it becomes something greater, but let's just start with that because at least we have some numbers to work with. Leprechaun offers us in the order of 3 to 4 years of mill feed of that high grade material, and then probably another, call it year and a half of low grade. So if you think about it in that context, currently the feasibility study is 10 years of high grade, 3 years of low grade. Well, if we add, call it 3 to 4 of high grade, we're now at 13 to 14 of high grade. And if we add 1 to 2 of low grade, we're at, call it 17, 18 overall. Okay. So it's quite significant. And of course, the actual impact to things like rate of return and net present value will depend on where Berry gets slotted in, because that's also subject to a number of different inputs that still need to be figured out as to where it might optimally fit in if it ultimately does become a reserve.
Fair enough. I appreciate that. And I think I know the answer to this based on what you've shared already, Hannes, but I do want to honor the question coming through asking, will your treasury get you through all of your activities this year?
Yes, definitely, and well into next year. So we're just extremely pleased with the strength of our balance sheet and the line of sight that gives us. Takes kind of the pressure off. Always having to look over your shoulder and do we need more money? Do we need more money? So we're very well positioned. And so yes, is the short answer.
Terrific. Thank you for that. A question from Michael asks, are there any plans for an American or USA stock listing?
Good question. I would say in my experience that comes with many pros and cons. We do currently have an over-the-counter listing to help facilitate trading in the U.S. But that's not one of the main boards I recognize, and so it's not something we've committed to doing. But as we, I'll say, continue to grow up and become a developer and ultimately a producer, certainly the access to the largest capital market globally is something that needs to be considered.
I appreciate that. I often default to a very general question for those stepping into the world of investing in precious metals. And we did ask this of our friends in the silver sector as well. But if you were asked, in a general conversation, why gold, why now, given your perspective on the industry, what sort of advice do you give to people?
Oh boy, well, that would have been a better one for Pierre during his morning. He's the gold forecaster. I think I'll endeavor to answer what is a general simple question with what I hope is a simple answer. I'm of the view that if we've all experienced truly unprecedented fiscal policy, monetary stimulus, whatever you want to use, quantitative easing, you name it, kind of every thing in the bag of tricks has had to be kind of deployed by governments here to keep the economy alive in light of COVID and other things. And I just sort of like the old kind of physics, like every action has an equal and opposite reaction. So at some point that is going to lead to something. I don't know when, and I don't know what the magnitude of the something will be. But the relevance of gold as a insurance policy and kind of both an asset class of safety has over centuries proven true. And of course it's not always linear, and there can be bumps in that road. For me personally, as a Marathon shareholder, I feel good about having a healthy degree of my net worth tied to gold as that insurance policy.
I appreciate that very much. Thank you for sharing. We have a question here in terms of the banking and financing side of the industry. Are there any senior lenders looking at mining projects?
There are. It's it isn't a huge cross section of commercial banks that are still active in that space. But I can tell you from our own experience, we engaged with I'll say roughly 10 groups late last year, using the pre-feasibility study as the basis to at least start a conversation, and had interest from kind of all of them. So there's still a wide enough group there to have constructive dialogues around it. But it's not 30, 40 different senior banks that are still active in mine project finance.
Understood. Thank you. Well, we're winding down our time. I want to get to one last question here. Sasha is asking, what's your cost per ounce of actually finding gold?
So thinking about our balance sheet, we have company to date, our exploration and evaluation asset is about 100 million. And that's a fully loaded number of kind of all activities that get capitalized, including exploration. So it's probably an overstated numerator. And if I think about, and if you'll allow me to use a round number to make the math easy, if we're cusping on 5 million ounces of total resource, you're looking at about $20 an ounce.
Okay. Helpful. Thank you for that perspective. I always like to leave the door open here, Hannes, for those that have stepped forward with insights from a company. Is there anything we haven't touched on or that's come to mind for you to share with our audience at this point?
No, I think given the generous time allotment you gave me as a presenter, as you said, we did a fairly deep dive. So I'm not sure there's much left. Usually we're able to give the whole pitch in about 10 minutes. So this was very gracious of you guys. And thanks again to everybody for joining today. And you can see there on the last slide, if you have any questions, all of our contact information is there. Wishing everybody a good balance of the week.
I appreciate that. Hannes, thank you so much for the time. We'll be watching the company with great interest, and I know we'll talk again. Thank you.
Sounds great. Thank you, Mark.
Thank you. For all of our viewers at this point, once again, remember the questionnaire. If you could fill that out for us, it helps us know how to do better moving forward. And we are going to take a little break here at the top of the hour. We have Monarch Mining Corporation coming up, so looking forward to that. Hannes, all the best from us to you.
Thank you.
Take care.